Market keeps dropping. My portfolio has taken a nosedive. I will show you my portfolio performance in a little bit, so be prepared for that. It does not look pretty. We will see here that the Dow Jones Industrial Average hit an all-time low year to date, 19.12%. We have the S&P 500, and it is down year to date 23%. Then we have the NASDAQ. Similar situation to the S&P, it almost hit its all-time low for the year to date, but it is down 31.36%. We are seeing 52-week low after 52-week low with so many companies out there, and people are calling this the double bottom because we had a bottom in June and now we're testing that or beating it right now in September. Is it time to panic? What am I doing? What are my thoughts on this? Well, I'm going from this to this. I'm smiling. This is a great time for us long-term investors, especially if you have 10 plus years to retirement. Even if you have 5 plus years, you have some time to really focus on your portfolio. So this is not the time to panic, and I'm going to explain why in this video. I'm going to explain how us as humans, we have what's called emotions, and for some reason, when the markets go down, we tend to go down with it with our emotions, and it causes us to sell, it causes us to rethink our strategies, so on and so forth. But there's something you have to hold on to, something that will be a savior for your portfolio, and that is logic. You have to remember a few things, which I'm going to go over after I share my portfolio performance. And it's very important to stay tuned and hear it through the end because it's something we all need to be reminded, or share this video with somebody that might be struggling with this downtrend in the market, because it might not be over. It might be another year or two before we start to see a turnaround. So what I'm going to do, welcome to my channel, first of all, Mark Arnold's Finance. If you're new to my channel, I'm somebody that is very transparent. I provide diverse quality content. What I'm going to do now is show you my portfolio performance and everything that I bought today on this big red day, which is Friday the 23rd of September. So if you appreciate the transparency, this content, I'd really appreciate it if you subscribe to my channel, give it a shot. I don't think you'll be disappointed because I'm just somebody that's trying to grow and share all my knowledge with you, because we can all grow together. We can all become wealthy together. So be sure to subscribe, and let's jump right into my transparency. I'm going to show my portfolio performance in conjunction with what I have bought today and a little bit of information on each buy. So let's look at the performance. Let's see this nosedive. And yes, if I let my emotions take over, I would let this be making me sad, keeping me up at night, but instead I am excited. So just a few days ago, I was down a little over 3%. Now I'm down just shy of 8%. So I went down just shy of 5% total from a few days ago, and now I'm in the red, $3,500. You'll see here, if you are a subscriber of my channel, a lot more of my holdings have turned to red. So definitely some hard times in the market. I think there's a lot of people out there that are posting on different forums of how fearful they are, how they're selling out, and I don't understand that, which I'm going to cover after I go through all the buys that I did today. So let's start with what I bought. First one I bought, which is going to be controversial, is I bought another share of Meta. Right now it is down for me a staggering 36.17%. I got into this stock at the wrong time, right before it took its big crash. And so what I've been doing is just averaging down, because this company, in my opinion, is highly undervalued. And I just recently did a video, so be sure to watch that, on Meta's hidden opportunity. There's so much to this company. I believe that once it has some decent earnings, it's going to take off. But if we look at its stock chart, we will see here that Meta is down 58.52% just year to date. And you'll see it took a little nosedive there at the end. Now, its market cap at one time was over 1 trillion. Now it's 377.36 billion. And its PE ratio is 11.64. So what I want to provide with all these buys that I did today is their average PE ratio of the last 5 years. So Meta's average PE ratio over the last 5 years is 26.67, and right now it's at 11.64. It's fallen more than half. And this company has still great cash flows. It's still buying back shares. There's a lot of good going on with this company. And I think it's just being beaten down because it's not a liked company. But you have to look beyond that, which again, watch my video. You'll see all my bullishness about this company. But it's extremely inexpensive. So Meta was a buy. If we go back to my portfolio, the next stock I bought was Home Depot in the discretionary section of the market. And I do want to buy Costco. It's going down, but it's still not at my buy price. I'd like to see it in the low 400s. So I decided Home Depot is still a high quality discretionary stock, so I thought I'd buy some more. And right now it is down 7.86%, which is kind of funny because it's down the same amount as my portfolio as a whole. I just noticed that, so that's kind of a funny thing to notice right now. Anyways, we will see here with Home Depot, with its stock chart, year to date, it is down 33.7%. That is massive. And you'll see here its market cap is 277 billion. Its PE ratio is at a 16.65, and it pays a dividend yield of 2.81%, which is very decent in my eyes for Home Depot. Now, again, their PE is a 16.65 currently. Over the last 5 years, its average PE ratio was 22.72. So it's definitely fallen below its 5-year average, and I believe this is a great buying opportunity for Home Depot. They have some high debt, but overall this company is still growing. It's still a very healthy quality company, and I have no problem adding shares to it. So Home Depot is another one I bought. The next one that I bought, we'll look here in my portfolio performance, is VIXUS, VXUS. Now this is an international ETF, and it is down 16.6% for me. And to me, that's no surprise. With the issues with China, the conflict between Ukraine and Russia, as well as many other things, is bringing international stocks down, which means this is probably a great time to be averaging down. So that is exactly what I am doing. Now with VIXUS, we'll see here that year to date, they are down 27%. So pretty big drop for an ETF. And I just really feel that once things turn around internationally, this will be a good, steady performer for me. And because this isn't an individual company, so I'm not going to have really PE data on it, I rather share the top 10 holdings of this ETF. So if we look here, we will see that on the very right, it says it's weighted, what each company's weighted. So very low weights, which means it's very diverse and safe. But you'll see Taiwan Semiconductors, Nestle, Tencent, all the way down to Shell, to Toyota, and Alibaba. This ETF currently pays a dividend yield of 3.89% on a trailing 12-month basis. So it pays actually a really great dividend. So hey, while it's down, I'll be collecting a great dividend and averaging down slowly because I don't want to make my international holding too big. Right now it's allocated at 2.82% in my portfolio. So I definitely want to keep this below 5%. So I'm in the range of just adding to this slowly, which is perfectly fine. Next, I want to move to my next buy, which is going to be TROW price. You'll see here it's down for me, my portfolio, 13.34%. This is one that is very reflective of the economy. When the economy doesn't do well, this company doesn't do well. When it does do well, this company does well. I know that could be price head for many stocks, but because this is an asset management company, when the economy isn't doing well, people aren't going to be buying things. They're actually probably going to be more selling things, which makes sense why this is going down. So it's something that I knew was going to happen, so I'm going to be averaging down. We will see here that TROW stock chart is currently down year to date at 44.84%. That's how much it's gone down, and that's pretty massive. Now it has a market cap of 24.22 billion. Its PE ratio is a 10.36, so pretty low, and its dividend yield is at a very mouth-watering 4.47%. So I'm definitely happy adding with a dividend yield like this. Now with their PE ratio at a 10.36, what's their average 5-year PE ratio? Well, it comes in at 14.95. So they've fallen below that, which is great because I like to buy when things are below the average. for quality companies, and I believe this is a quality company that once the economy starts going on the uptrend, my losses will turn into greens, no doubt. So the next buy that I have is Ally Financial. This is a newer holding of mine, and currently it's down 11.11% in my portfolio. And this is just a company that I like. I utilize it. I think it has huge growth potential. There's just a lot of good things. I did a video on it recently. Be sure to go through my channel. You'll find it. I have everything Ally in that video. But we'll see here that their stock chart year to date, they are down 38.55%. So a very deep dive. Their market cap is at a 9.2 billion. Their PE ratio is at a very low 4.2, and their dividend yield just hit above a 4%, which is great. So I'm definitely adding to this. Now, their average 5-year PE ratio comes in at a 9.28. Right now, they're at a 4.21, so pretty much half of what their average is. So I'm a happy buyer of Ally Financial and think long-term this will be a big win for me. The next one that I took advantage of today and bought is probably one of the highest quality stocks that I think is considered around the world, and that is Microsoft. We will see here that Microsoft in my portfolio, I don't think it's ever been in the red, but now it is at 1.79%. So I just can't help myself but add more to this high quality stock, even though it's 12% of my allocation right now, which is above my 10% rule. But for the time being, in the circumstances we're in, I'm okay adding to a position like Microsoft. So with Microsoft, we will see here that year to date, they are down 28.93%. That is massive for Microsoft. They rarely dip, let alone close to 30%. So right now they're at a 1.77 trillion market cap. Their PE ratio is at 24.66, and their dividend yield has hit above 1% at a 1.14. And they just raised their dividend. So anything for me above 1% for their dividend yield is awesome. And with their PE ratio at a 24.66, that may look expensive, but if we look at their average PE ratio for the last 5 years, it comes in at 35.12. So they have fallen quite a bit regarding their PE ratio. So this is a company that long term, I am betting that this will be one of my best performers. And so I have no problem adding now because I'll turn back and be glad I bought a company like Microsoft in the times we're in right now. Now the second to last stock that I bought, which is, this one's an ETF, is FIDU. This is an industrials ETF, and we'll see here, it is down for me 6.94%. So it's fallen into the red. A lot of my ETFs, they're the last ones that have been dipping into the red just because they're considered more safe, more diverse, so it makes sense. But with industrials, I just, 3M has been a dog for me, so I definitely want to add more to this ETF than 3M at the moment. And if we look at FIDU, their stock chart year to date, you will see here that they are down 20.37%. So that is pretty big for an ETF, and I just have to take advantage of this. If we look at their top 10 companies that are in this ETF fund, we will see that they include big names like Union Pacific, United Parcel Services, Honeywell, Deere & Company, Lockheed Martin, Caterpillar, Boeing, so on and so forth. I think these are great companies. You'll see their weights a little bit more than what was in VIXIS, the international one. So they're putting more weight on companies, so I'd say it's a little more risky, but it's not, 10% or more. So I think they're doing a good job here, and I am definitely excited to hold this. And it pays a dividend yield of 1.4%, so it is lower. I still think that long term, the industrial sector will do well, and this is a great way for me to diversify in a sector that I am not too familiar with, and that's how I like to handle those sectors. Next, and my last buy, is one of my favorite ETFs. Actually, it is my favorite ETF, and that's SCHD. This is a dividend ETF. Currently, it's in the green, so the first one that I have bought in the green today, and that's 3.54% in the green. Now, SCHD is considered one of the highest quality dividend ETFs. It just has, I've done a video on it, why I think it's the best ETF out there. It's a little bit further back on my videos, but you can find it. It's got massive views, actually. I think people love this ETF because it pays healthy dividends for an ETF that provides diversity, safety, and they always choose holdings that are above the industry average. Now, if we look at their top 10, currently we will see here that they have companies like Pepsi, Texas Instruments, Cisco Systems, Coca-Cola, the Home Depot, IBM. All these companies, I believe, are strong companies that have solid growth futures, and they're weighted pretty good, I feel. Again, anything below 10%, I'm not worried about. Some ETFs do have companies that are above 10% weight. So because all of these are below that and below the 5% even, I think it's very safe. And what I really like is what they pay in their dividend. It's a 3.35% dividend yield that this ETF pays on a trailing 12-month basis currently. Definitely an ETF that I will be adding to heavily. So I want to bring this up. I put this up in a video, the most over and undervalued sectors. So what I stayed away from today, so I strategized, is I stayed away from the top 4 overvalued sectors: real estate, materials, healthcare, and utilities. I just said I'm not going to add to those. Instead, I added to the bottom half, shall we say, with industrials being the one that kind of is in the top area, but I do think it has some huge potential in the future. So I added to technology, I added to discretionary, and financials, which is the second to most undervalued sector. So I just want to say I do put my strategy when I do buys, and I picked what I felt were quality buys and things that I either want to up based on allocation basis, or I just think long term I can't help but buy them right now at these great prices. What I want to say is, while everyone's out there panicking, this is not the time to panic. This is the accumulation time. This is time to accumulate a bunch of stocks because, again, logic versus emotions. What I don't get is, let's say you're buying a house, and let's say the house lists for $500,000. You really like the house. You want to buy it, but you decide not to. Well, the house goes down to $400,000. Wouldn't you buy that house? That's how I view the stock market and stocks. A lot of people will see a house go from 500 to 400 and they get fearful and they don't make that purchase. Why wouldn't you buy? Instead, they wait till it goes up to 600,000 till it's too late. They have FOMO and they buy at an overpriced amount. So this is the time where stocks are going down, they're on sale, and I believe it's great for us to be buying and accumulating. This is the accumulation time. That's what I'm calling this, accumulation time. I want to put this up here. I found this out on the internet, thought it was says a lot. So especially if you're doing dividend investing, you're gonna have people look at you and judge you. So when you earn 5 cents of a dividend, you'll have a lot of people say, it's not worth it, bro. Like, that's nothing, right? They kind of make fun of you and you kind of feel bad about yourself. Then you get up to maybe earning $5, right, in dividends from a company, or maybe over a month or whatever. They're still going to be saying you're wasting your time. $5 is nothing. That's barely going to buy you a soda at the store. But then when you get up to $50, I think that's when people start to maybe get a little jealous and maybe like, hey, I'm missing the boat here. But they still are going to say you can't buy much with that. But I still think $50 is awesome. Then you're going to move up to earning $500 in dividends. And then that's when people start to get interested, right? They'll say, can you show me how? And a lot of people are still going to choose not to. You will see that. I can't tell you how many people approach me about investing. Friends, family. I explain it all to them. I give them my best advice and guidance, and they still don't do it. I don't know if it's laziness or they're scared or what. But then you get to $5,000, right? You're earning $5,000 in dividends, and people will say, dang, you're lucky. That's awesome. Like, how did you do that? So on and so forth. So they start looking at you, but then I think they get into this realm like, I could never do that, so why even bother? Then when you really get far in dividend investing, which would be a great goal of mine, is to make $50,000 in dividends. Let's say $50,000 a year. Then you're going to get people that are just saying, I wish I started when you did. Well, for a lot of people, we did. We did tell you to get started and you didn't. And this is what happens with investing. That snowball effect happens. In the beginning, it's a little tough. You don't see much. But then when that starts accumulating, growing, that snowball effect, you are starting to make real money. And people are going to be looking at you saying, dang, I wish that was me. So if you're watching this video and you're thinking of investing, now is the time to do it. Not tomorrow, not next week, now. It's time to start buying, averaging in, coming up with your strategy, your plan, because you don't want to be the person that says, I wish I started when you did. You want to be the person that says, I started, and in 5 years from now, I'm going to have people telling me, you're lucky, or I wish I started when you did. So I just thought this was really good to share, because now, of all times, when the stock market's down massively, this is the accumulation time and time to be adding. I also want to add this. I've showed similar charts in the past, but during the history of the stock market, this is focusing on the S&P 500, there are more up times than down times. In other words, where the stock market goes up outweighs far when the stock market goes down. You'll see here the downtrends are in red and the uptrends in the stock market are in blue. So where would you rather be buying, in the blue or the red? I'd definitely rather be buying in the red and accumulating then, which I think is definitely now, because when the blue times come, you're going to see all that effort that you put into buying when prices were cheap and on sale grow massively during the expansion times, which are those times in the blue. I will say this, it's times like these where real wealth is made. Take advantage of it. This is the time to really be buckling down and focusing on your investing. And I consider this my early birthday present. My birthday is right around the corner and the stock market's going down. Instead of being someone who panics, sees that as awful and losing sleep over it, I'm smiling, I'm happy, I'm buying, and I'm accumulating now, and it's gonna create great wealth in the future for myself. And if you follow this channel, you'll see my journey and you'll see me get there, and we all can get there together. Let me know how you're taking advantage of these times. What are you accumulating? What are you buying? What are your strategies? I'd love to hear it. My strategy, my accumulation kind of strategy is I'm going to be putting more money into the stock market. I feel this is the time to do it. And I'm going to be really focusing on those companies that I really want and really feel in the future are going to be the real winners, like a Microsoft, like a Home Depot. I'd hope to get into Costco. So many of my stocks, definitely the ones I mentioned today, are ones that I'm adding because I think they have great futures. So again, try to separate your logic from your emotions. Keep your emotions on the side. Focus on the facts. Focus on the things I talked about in this video. This is the time to accumulate. Things are on sale. Remember, are you going to buy the house at $600,000 or $400,000? Now's the time to start buying. And it always just confuses me that people tend to usually buy when things are going really well and prices are really high. But then when they're down like they are now, people are selling out. They're fearful. It's like mass hysteria and panic out there. I've seen it on a lot of the forums I'm on, and it just don't make sense to me. So be sure to take advantage of these times. They will help you create long-term wealth, and you're going to be thanking yourself in 2 to 5 years. I pretty much guarantee it. So let me know what you thought of this video. I hope it helps. Please share it with anybody else that you think could benefit from it. Be sure to subscribe to my channel, and happy buying. Let me know what you're buying, and we'll see you next time on Mark Arnold's Finance.